Hello, traders. Gary Wagner here. Just after 2 o'clock in Honolulu, 8 o'clock in New York. It is Thursday, 5th day of August, 2021, and this is the Daily Report for Gold and Silver. As much as I am an advocate for technical indicators being able to correctly forecast market moves, in the case of tomorrow's jobs report, it is all about the fundamentals. We'll address that during the show as we look at some charts, and we'll talk about it during the opening letter, but the price board and show begin now. With the U.S. Labor Department's jobs report set to be released tomorrow, with many analysts forecasting an additional 850,000 jobs being added in the month of July, the gold and silver market, the safe haven assets, are certainly reacting with caution. Currently, we've got December futures at 1806.50. It's a net decline of $8 on the day, or 0.4%. It traded to a high today of $1,814.90, and the low today was $1799.70. Declines in both gold and silver come concurrently with fractional declines in the U.S. dollar, down 0.05% at 92.225. While I acknowledge that most of my work is technical in nature, I still consider myself to be a hybrid trader, meaning it is fundamentals that move the market, and the mathematics or charts behind it simply puts that into mathematical terms. While analysts might differ, numbers do not. What I mean to say is this: tomorrow's jobs report will definitely move gold prices higher or lower based upon whether it comes in above expectation or at expectations even, or below expectations. And as you can see from the opening letter that I presented to you, there are differing opinions, and a case can be made for both sides of the fence. That being said, we have definitely had interesting activity over this last week, with today gold trading to a lower low than we have seen, actually breaking below the 100-day moving average as it traded to a low of $17.99. On the other hand, yesterday's ADP report created a tremendous spike, actually trading well above the 200 and the 50-day moving average. In fact, it traded to a high of 1835 that corresponds to the 50% retracement. Realize this is a shorter data set in which we begin at 1920 and we take that down to these lows at $1,750. What I can say is this: although we do not know what numbers will come in tomorrow, if the report comes in well under the forecast, as some analysts believe it will, we could see gold prices spike back above the 38.2% fib retracement at 1850, above both the 200-day and 50-day moving averages, and we could see it challenge the 50% retracement at 1835. If, in fact, it comes in well above expectations, we could see it challenge the 100-day moving average, which is current support, which is why in yesterday's opening letter, I stated that we could see resistance become support if, in fact, the report comes in tomorrow under expectations, or we could see current support become resistance if, in fact, it comes in at or well above the forecasts for tomorrow's jobs report. Nonetheless, I believe that it is likely that we will not see as strong of numbers as anticipated, and that is mostly based upon the ADP report that came out yesterday. For traders that really want to be conservative, right now we have gold trading at 1806.50. We're in at 1812. You can take a small loss and not deal with the stress or pressure of tomorrow's report. On record, we are going to maintain our current long position as well as maintaining our current stop. We have our stop well under the 50-day moving average, and we actually have it currently very close to the 23.6% fib retracement. Even analysts that expect there to be a very bullish report tomorrow from the Labor Department, anticipating that that would only take the move to around 1790, and their suggestion is to buy the dips. We will have to see how all of that unfolds in the next 24 hours. The one certainty about tomorrow's jobs report, it will be the most important data that comes out from the government prior to Fed members meeting and discussing potential changes in their monetary policy at Jackson Hole's symposium, which occurs on August 26th. Lastly, silver lost a little over 0.3%, about 9 cents, and is currently bid at $25.20. This basis the most active September contract. However, traders, silver is a different story completely. We did see that spike or exaggerated high yesterday when the ADP report was released. At the same time, we must acknowledge that it has been trading under much greater pressure than gold. We can take a look over the last couple of months where it would consolidate, trade sharply lower, then move back into a sideways manner, and then trade sharply lower. We did have a spike up here, but again, we are now in consolidation. Silver is now trading in Australia. It is trading at $25.19.5, roughly 5 cents below the close in New York. We are maintaining a neutral to bearish stance in silver and a cautiously bullish stance in gold. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekend review and update on the U.S. Labor Department's jobs report. Have a great day. Bye-bye.